Hello and welcome to NDTV and BQ Prime's special segment, Let's Talk Business. I'm Priyanshi Sharma and we'll get you the top news from the world of business, finance and the economy. Well, markets snapped the 3 days of winning run to end lower in trade, while consumer durables advanced the most. Metals and banking sectors were the top losers. My colleague Hiral Dadia joins us for more on this from the BQ Prime newsroom. And Hiral, take us through the market highlights today.
Thank you. Markets gave up all the early gains and ended lower in trade today. Overall, Nifty is back below the 18,300 mark, and you saw the Sensex, which fell by nearly little over 150 points in intraday trade. If you see Nifty 50 as well, we hit a low of around 18,262 in trade and a high of around 18,392. So the gyration was almost little over 100 points that was seen from the day's highest levels. Though if you see the advanced decline ratio, that was very much in favor of the bulls on Nifty 50. Bank Nifty as well saw cuts of almost 275 points and ended below the 43,680 mark. So that's where Bank Nifty was in today's session. Clearly, if you see sectors, it was the metals and the banking pack that was actually putting pressure. The HDFC twins were also a major drag for the markets. And there was clear underperformance that did come in from the Bank Nifty vis-a-vis the benchmark indices. Broader markets, pretty much a flattish note is what we've seen on the bank, on the mid-cap as well as the small-cap index. And the breadth has remained in favor of the bulls overall. So there is a lot of stock-specific action on the back of the earnings reaction and a lot of newsmakers, but that's not translating, and there is some bit of consolidation that's happening in the markets, and that is expected to continue with the kind of up moves that we've seen in the recent past. If you see the gainers, you had Sun Pharma, DRL, Hero Moto, Titan, as well as SBI Life that were the top gainers, whereas pressure building on Adani Enterprises Sports, there was some bit of profit booking that did come in after the kind of rally that we've seen over the last couple of trading sessions. Tata Motors, and as mentioned, the HDFC twins as well. In terms of newsmakers, you had a Deepak Nitrite, a smart surge coming in there on the back of the 5,000 crore capex plan announced. Mahindra CIE also jumped as the promoter's stake sale news and the stock hit a 52-week high. Shriram Properties also gained the most in almost a week, and this is after bagging the rights for a 3.2 million square feet development project. HDAMC was in focus as well. They got the SEBI final approval for change in control post the HDFC Bank merger. On the back of an earnings reaction, you had a Hindalco. Sudarshan Chemicals saw smart gains. Dixon Technologies on the strong growth outlook saw a smart up move. Biocon saw a good move in the last 17 months after the profit beat estimates. Similar it was for Galaxy Surfactants, where the stocks fell the most in over 2 years, and this was mainly on the back of the profits that actually missed street estimates. And you had a Polyplex as well that plunged in trade on the back of the decline in profitability. An interesting one was a Metro Brands, which actually recovered after the biggest drop in over a year after its Q4 results. Moving on, a lot of auto and auto ancillary names that hit a 52-week high in today's day of trade. So you had the likes of a Fiat, Apollo Tyres, TVS Motor, as well as a Suprajit Engineering. So all in all, a lot of sector-specific action is what we witnessed. A lot of stock-specific action is what we witnessed. But there is consolidation in the markets. It is expiry soon. So there is going to be high amount of volatility as well. Back to you.
And the other big story that concerns all of us, inflation may have eased, but the Reserve Bank of India is on alert. The RBI Governor Shaktikanta Das today has said that there is no cause for complacency. On the other hand, the governor is optimistic about India's GDP growth, expecting it to cross 7%. Our colleague Jaspreet Kalra joins us with a wrap of all that the RBI Governor has said today.
India's GDP growth may surprise to the upside in financial year 2023, and now this is according to the RBI Governor Shaktikanta Das. The RBI Governor said this while speaking at the CII's annual session for 2023 organized in New Delhi. The Governor also said that high-frequency indicators monitored by the RBI, about 70 of them, have shown that economic activity has sustained momentum in the final quarter of FY 2023. Here's what the Governor had to say. Take a listen.
It will not be a surprise if the GDP growth of last year comes slightly above 7%. But let's stick to 7% for the time being. And the trends, the fourth quarter trends in particular, It initially appeared in the third quarter that there was a pent-up demand which was supporting economic activity. But all the economic indicators in the Q4 of last financial year, they saw that economic activity sustained momentum. And in fact, all the fast move, high frequency indicators, about 70 of them which we monitor in the Reserve Bank of India, almost in all of these high frequency indicators, the momentum was maintained in Q4. So therefore, I will not be surprised. We should not be surprised if the growth is slightly more than 7%.
Speaking about inflation, the Reserve Bank Governor also said that while inflation has moderated in India, it is no reason for complacency and one must remain alert to challenges that may appear down the horizon, especially in reference to the El Nino effect that could play spoilsport for Indian monsoons. Now, the RBI Governor also said the RBI is assuming a normal monsoon for India over the next financial year, but inflation surprises could appear down the horizon. Now, India's CPI currently stands at 4.7% for the month of April, and this was down from 5.7% in March. Overall, the RBI's outlook for inflation has softened as compared to previous estimations, but the RBI Governor emphasized yet again that it is important to remain alert and watch out for inflation risks. Here's what he said. Take a listen.
The situation is extremely fluid. The situation is highly dynamic. And I would just like to say that the war on inflation is not over. We have to remain alert. There is no cause for complacency. Especially we'll have to see how the El Nino factor, what has been anticipated, the El Nino, how it plays out.
Speaking about the MPC's decision to pause rate hikes in April, the Reserve Bank of India's governor also said that the MPC's decision was driven by the consideration that 250 basis points worth of hikes have already been pushed to the system and one should examine how the effect of that plays out. The RBI governor also emphasized that certain surprise decisions taken by the MPC in the past have consequently proven to be the right decisions to be taken. Here's what he had to say about the MPC's thinking on policy matters. Take a listen.
I think looking back, I can say that we were prudent then when we decided to increase the rates by in a surprise meeting, and we are also prudent now when we have decided to take a pause. So it's a case of prudent then and prudent now. That's our assessment. I mean, somebody can disagree with that, but it gives us a lot of satisfaction that the markets, the industry, the business, and even the analysts have endorsed the decision of the Reserve Bank of India.
Finally, asked about why the RBI had just not allowed rupee 2000 notes to disappear from circulation on their own as opposed to taking a decision to withdraw them by September 30th, the Reserve Bank of India's governor said that in the RBI's observations, these notes are not commonly used for transactions. They have served their purpose of remonetizing the economy post-demonetization in November 2016, and also they can be unintended negative consequences of letting high-value currency remain in circulation. Here's what the RBI governor said regarding the decision to withdraw the notes.
Anecdotally, through our informal surveys, we found that 2000 rupee notes were not being used at all. I mean, it was being used, but not commonly used. That's what we came across. And having that kind of a note in circulation, and also this was introduced for a specific, primarily for the purpose of putting back, replenishing the system with the value of the currency which got, whose legal tender status was withdrawn. And that purpose was fulfilled 5 years ago. And it was not commonly used in transactions. These are reasons which we have stated in our press note.
And Dixon Technologies reported a 4% uptick in revenue at 3,065 crore rupees, which surpassed estimates. Margins were at 5.1% and the net profit at 80 crore rupees too exceeded the estimates. In an interaction with PQ Prime, the CFO Saurabh Gupta outlined the company's capex plans and outlook for financial year 2024. Listen in.
I think so. Operational fund, I think a good part about this year is that despite this growth of 14%, it has not come at the expense of the balance sheet. So we did almost 720 crores we generated almost 720 crores of cash flow from operations, which has really helped us meeting the capex of 450 odd crores that we did in FY 22-23. And also we were able to pay down our debt by 275 crores. So today my debt to equity ratio is even got strengthened to 0.14. So now for a future capex, of course, we are very well funded. It can be easily funded from internal accruals. But even if some larger opportunities comes, we think we can clearly leverage more debt. And I think so we have a very strong balance sheet, significant cushion in the balance sheet right now. So that's also very positive, I think so, which has happened in this financial year.
An iron ore producer, NMDC, reported a double-digit growth year-on-year in net profit despite a dip in revenue from operations. The revenue slipped about 14% to 5,851 crore rupees, but it surpassed street estimates. Margins were largely in line with estimates at 36.95%, while net profit jumped 2,271 crore rupees. Net profit was aided by exceptional income of 1,237 crore rupees. The chairman, Amitav Mukherjee, shared projections for the upcoming quarter.
I'm happy to note that the momentum continues into the Q1, and April has been the best ever April. So in terms of volumes, yes, it's been a very satisfactory and very commendable past few months. In terms of pricing, of course, there is a pressure. As you know, internationally, the prices have come down very substantially of iron ore. There have been pressures within the country also. The steel prices really haven't shown too much of an upward movement. And there has been a pricing pressure, and I expect that even in Q2, the pricing pressure will continue a little bit because Q2 has historically been the lowest of all the quarters in terms because of monsoon and other things.
That's all we have for you in this edition of Let's Talk Business. Do tune in at 5:30 p.m. every weekday to get your latest business news. Thanks for watching.